From the CUBE studios in Palo Alto and Boston, bringing you data-driven insights from the CUBE and ETR. This is Breaking Analysis with Dave Vellante.
We estimate that Google's cloud business will exceed $50 billion in annual revenue this year, with Google Cloud Platform, GCP, comprising more than 50% of the company's cloud revenue for the first time ever. Why is it then that Google's cloud business, a $50 billion plus entity growing deep into the double digits, gets so much criticism? The answer is simple. Google's cloud, with arguably the best technology in the industry, is 2.5 to 3.5 times smaller than the cloud businesses of AWS and Microsoft. Nonetheless, Google has constructed an AI optimized stack that spans from infrastructure through to application level agents. The foundation includes custom hardware such as TPUs, integrated databases, and a maturing development environment in Vertex AI that supports both proprietary models like its own Gemini and third-party LLMs. In our view, this positions Google with one of the most complete offerings to build agentic systems for enterprise workloads. In addition, Google's open recognition at Next 2025 that enterprises won't put all their data into the cloud reflects a pragmatic understanding of enterprise IT environments where hybrid and multi-cloud deployments remain the norm. By enabling integration with existing data, applications, and workflows across its ecosystem, Google aims to accelerate time to value for AI initiatives, bringing AI to the data irrespective of physical location. Hello and welcome to this week's theCUBE Research Insights powered by ETR. In this breaking analysis, and on the heels of Google Cloud Next 2025, we unpack Google's cloud business and put it in context with other leading hyperscalers. We'll explain why Google often gets shortchanged in the cloud discussion, how its cloud business compares to other US-based hyperscalers, i.e. the other two, and how spending data from ETR supports the notion that AI is powering Google's cloud business with higher growth rates and increasing profitability. Google Cloud Next showed off a ton of new announcements. I live blog most of the keynote on Wednesday, and you can find that on thecuberesearch.com. In addition, Paul Nashwati published 2 research notes on Google's developer innovation, so you want to check those out as well. There was so much, just a couple of highlights from our post. A 7th generation TPU, it's called Ironwood. It's got like 40 plus exaflops per pod. They talked about Cloud WAN for enterprises, basically enabling enterprises to tap into its 2 million miles of cable, undersea cable network, the super low latency network. They talked a lot about thinking models and multimodal models and flash models, and they really pounded agent space, which combines advanced search and conversational AI. Of course, Gemini, as I mentioned, and a lot of third-party agents to automate workflows. And then they announced a number of industry-specific agents. They also had a lot of other infrastructure around things like Hyperdisk, which is block storage, Google's distributed cloud for on-prem and hybrid workloads, and activity at the edge. This thing called Anywhere Cache. Google has good names. Google's names are better than AWS's, I have to say. But anyway, let's get into the meat of the discussion today. Alex, if you'd bring up the first slide. So this basically shows the all-in cloud revenue. So it's infrastructure as a service, platform as a service, and SaaS. And it shows 3 years of growth. So we estimate in total, the big three will look at all their total cloud in these 3 sectors is going to account for $358 billion this year. Now, as I said up top, AWS and Microsoft are 2.5 to just over 3 times larger than Google. And you can see here in the gray, Microsoft leads with 178 billion, AWS 126 billion, and then Google, bringing up the rear here at 54 billion. But if you think about it, thank you, Alex. How many companies out there in the tech world are more than 50 billion, growing at 30%? Imagine Cisco gaining share in multiple sectors and growing at 25 to 30%. I mean, that's what we're talking about here with Google Cloud. Now, of course, in fairness, Google Cloud is able to take advantage of not only the cache that Google advertising and Google search and YouTube throw off, but the infrastructure. But that is basically Google's advantage. So Alex, if you go to the next slide, this is a breakdown in percentage terms of each of those businesses, and it's telling. So this is the as a service business for Microsoft, AWS, and Google. And you can see Microsoft and Google, as we show in the gray, have most of their cloud business in SaaS, with less than half last year coming from IaaS and PaaS in the case for Google, and certainly in the case for Microsoft. So Microsoft, the dominant SaaS business. The chart's a little bit misleading. This is, the left-hand axis, the vertical axis is percentage terms. So don't think that Google's IaaS and PaaS business are larger than that of Microsoft. They're not. Remember the previous chart, we're talking about a business in calendar year 2025 that's 178 billion for Microsoft and 54 billion for Google. These are 2024 mix data that I had handy. So what's going to happen in 2025 is that blue and the orange in Google are going to pop up to just over 50%. Okay, but then contrast that with AWS. Look at AWS. It's all blue and orange. AWS has a very tiny slice of gray, i.e. very little SaaS. So Connect, Amazon Connect is an example, the contact center as a service, a solution. So you can either view this for AWS as either upside opportunity or a weakness. And there's two sides of that. On the one hand, Microsoft is, and we'll talk about margins in a moment, but Microsoft has better margins because it's a software company. Google is just on the early part of the profitability curve. We'll talk about that as well, but it's got a larger proportion of software in its overall mix. So that should help it. AWS is actually quite profitable with really just infrastructure as a service and platform as a service, which is pretty impressive. All right, Alex, take us to the next slide if you would. This is a slide from ETR, and it shows the net score granularity, the fundamental methodology that ETR uses in its quarterly surveys. So let me explain the methodology, and I'll talk about the importance of it, which is that yellow line. But basically what you have here in the vertical axis is net score. And what net score is a measure of the net percent of customers in the survey. ETR does these surveys each quarter, that are spending as follows. The lime green is they're adding the platform new. So you can see in the April survey, 7% of the end number of customers, I don't know what it is offhand, but it's hundreds of Google customers. You can see in the upper left, we've selected on Google, and you see below on the left in the middle there, all the products that it represents. And so we're just selecting the whole portfolio. But the lime green, that 7% is new customer adds. The forest green, 38%, is the percent of those customers spending more than 6% relative to last year. The gray, is spending flat. The pink, that 7%, is the percent spending down, and then the 5%, red, is isolation or churn. And you subtract the reds from the greens and you get net score. That's the blue line, which is solidly in the 30s. Anything over 40% is exceedingly high. Anything in the 30s is very respectable. The yellow line is pervasion. It's a term that ETR used to describe the penetration in the data set, and it's calculated as a function of how many customers in the survey respond that they're Google customers. But look at the yellow line. It goes from 26% in January 2023. You remember that was just a couple of months after ChatGPT was announced and the AI awakening, hit the market. And it's jumped up to 33%. So a 7 percentage point gain in just a couple of years for Google. And of course, the premise that we're working on here in today's breaking analysis is that AI has really been a tailwind for Google. So if you bring up the next slide, Alex, we'll talk about that. I want to really explain to folks how Google is closing the gap with AWS as it pertains to machine learning and AI. And that really is what's, we think, powering a lot of Google's and Google's overall cloud, but specifically GCP's growth. And we certainly saw that on display at Google Next 2025. Okay, so what this shows is the shared net score in the survey. So the survey here, the April survey is 1,859 N. So a massive number of respondents each quarter. Massive, it's a very, very solid number. And you can see we're highlighting the machine learning and the AI sector, and we're just focusing on AWS and Google. And so the vertical axis is net score. The horizontal axis is penetration into those 1,859 accounts the overlap percentage. So you can see in January 2023, you can see the position of AWS and Google. Again, this is just for the machine learning and AI sector. At the time, AWS had an N number of respondents. Out of that 1,859 of 175, Google had an N of 127. So you just divide Google into AWS, you get 73%. So Google's 73% of AWS in January 2023. Fast forward 2 years and a few months, and two things happen. One is the N's go through the roof, and you can see AWS at 449 and Google is at 425, but Google is now 95% of AWS's N. And you also note in the upper right-hand corner, you can see in the green, AWS's AI ML net score is 60%, Google's 56%. Remember I said anything over 40% is considered exceedingly high. So this is very positive data, and sometimes I think it gets lost because AWS is doing so well. You can see the rapid rise in the ends for AWS as well, and so you kind of sometimes you just don't see Google in that mix because the other folks, AWS and Microsoft, are growing so fast. But now let's isolate in on GCP. I want to share some other data with you, Alex, if you bring up the next slide. This shows the year-on-year growth rates. We've been tracking this for a number of years, so I just went back to 2019. The growth rates for the big three, AWS, Azure, and GCP. So this is just IaaS and PaaS for hyperscaler revenue. So I've stripped out that gray area that I showed you before, that SaaS business, which was powering obviously Microsoft, but Google had with Workspaces has a big chunk of that as well. But look at this, so you can see the growth rates obviously came down from pre-COVID levels as you get the law of large numbers. But Google is significantly outpacing its competitors in terms of growth rates. We have Google growing in 2025, you can see the estimates at around 34%, Azure 27%, and AWS at 17%. Just listening to Jassy and reading his letter, I actually think there may be some upside in AWS, but we'll dig into that in later breaking analysis series. But then what we did is we compared the cloud growth to overall IT spending. That's the yellow line, and so you can see it's far, far below the big three hyperscalers. So you got IT spending growing in the low to mid single digits, and you've got the overall cloud, the hyperscale infrastructure as a service and platform as a service, growing in the very solid 30% range, which is incredibly impressive. So now let's double click now, Alex, if you would go to the next slide. Let's double click into the IaaS and PaaS revenue, look at the yearly growth in our 2025 estimates. So what this shows is the IaaS and PaaS revenue. It says revise. Revise means that when the leaked court documents came out from the Microsoft Activision trial, we stripped out, based on Satya's memo, we stripped out some of the revenue that we had in Microsoft Azure. We were already the lowest in the industry when we stripped that out. You might recall Microsoft last year restated its Azure definitions, replacing some of the older security and mobile services that weren't growing as fast with AI and Gen AI, which were growing faster. So it had the effect of boosting the Azure growth rates. We didn't have to make a change there because we had already adjusted for that, ironically. And so when we mapped it out, when we did the research, we said, well, we're basically within a whisker of what these changes mean. So we kind of kept everything the same, so we didn't have to restate everything, but it really it was immaterial because we had already sort of done those adjustments. At any rate, what this shows here is AWS, Azure, GCP, and we put in Alibaba as well as a kind of a quasi hyperscaler. Some people debate that, but you can see the overall IaaS and PaaS business surpasses 250 billion this year by our estimates, 255, 256 billion. And you can see GCP revenue growth, it's outperforming its peers. And as we showed earlier, the ML AI, we think, is a big tailwind and it's closing the gap on AWS and is supporting that higher, substantially higher growth rate, double the growth rate that we're forecasting for AWS, of course, at a much, much smaller level. But again, you're talking about a $28 billion cloud business, infrastructure as a service, platform as a service for GCP. So much, much higher than the overall Google cloud business. So remember, Google doesn't report on its GCP growth or the absolute numbers. It just gives kind of rough guidance. So we have to interpret from market signals and other surveys that we do. And so the other thing too is that the margins of Google business have finally crossed over. They finally gotten profitable. So that's something that we're paying a lot of attention to. But bottom line is Google is third in this 3-horse race. If you count the races, just 3 horses of hyperscalers, but the market is so big outside of that. There's so much opportunity, both on-prem, at the edge, internationally, new services, AI, agentic, on and on and on. So the market is much larger than the revenue that's being generated by those big 3, even though the revenue generated by those big 3 is massive, as we just showed you, 255 billion. But as I said, Google's finally turning a profit, Google Cloud. If you go to the next slide, Alex, we can dig into that a little bit. So this shows Google Cloud's operating margin as a percent of revenue going back to Q4 2022. So the quarter that ChatGPT was announced, Google was losing about 2.5%. Its operating loss was about 2.5% of its Google Cloud revenue. And you can see, other than Q4 2023, it had a steady increase in operating margins and is now at 17.5%. So it's not setting the world on fire, but what's happening is scale, Google scale is driving greater profitability. They're driving efficiency. Thomas Kurian is focusing on every aspect of the company and really pushing efficiency across the business. Now, there are offsets here. The offsets meaning there's headwinds, and those headwinds are that they're spending so much money on capex, as are the other folks, that have to be depreciated. So that depreciation is an expense that hits the operating profit. So the thing here is that the Google's 17.5% is much lower than AWS, which is in the mid to high 30% operating profit. And Microsoft Cloud, we would guess they're probably in the high 30s, maybe in the low 40s. Microsoft's intelligent cloud is in the mid 40% range, which is just absurdly profitable. But they include a bunch of on-prem stuff and hybrid, and I think SQL servers in there. So when you look at the definition of intelligent cloud, it's really not apples to apples with GCP and AWS. AWS, has been consistently lately in the mid 30s, and it does fluctuate over time. But thinking about that, I mean, around half of its business, probably a little less than half of its business is compute. Much of AWS's business is, of course, IaaS, as we showed you before. But the fact that they're able to get that type of profitability just shows you they've got great efficiency, good margin. Maybe people would argue their pricing is not the best. And you remember when the cloud started, moving to the cloud was actually cheaper. Many would argue it's not today. I think it is in some cases, and it's not in other cases. That's kind of the old horses for courses. But as I say, that CapEx needs to be depreciated, and that's going to be a drag on operating profits. And if we show the next slide, Alex, this is the one we've shown before, but this is our estimate of what CapEx looks like in 2025. I saw an article in the Journal the other day, said it was lower than this. I think they were confusing 2024 and 2025. And there could be calendar and fiscal year issues there as well, but it doesn't really matter. I mean, we're estimating well over $300 billion this year from Amazon, Microsoft, Alphabet, and Meta. Throw in Meta there because look at how much Meta is increasing. They just dropped Llama 4 this past week. But you can see Alphabet, relative to the other two hyperscalers, Amazon and Microsoft, is really stepping up. Google really stepping up its CapEx investments. The other thing to note is a lot of Amazon's investments go to the Amazon.com warehouses, its physical infrastructure. I think Microsoft's actually toned it down a little bit. I think they're now saying 85 billion this year. So we have to update this chart. This is one we used it a couple episodes ago. But nonetheless, we're talking over 300 billion, and that becomes somewhat of a drag on that operating profit. So we'll keep an eye on that, but it's certainly not a drag on the industry. It has been powering the industry, pretty substantially. Okay, so some other things that we're going to be watching. Alex, why don't you bring up the next slide and we'll wrap here. Can Google turn its lead in foundation models and its integrated AI strategy throughout the stack into a competitive advantage relative to AWS and Microsoft, and continue to gain share? I mean, it's clearly gaining share. It's growing faster than the other players, certainly in IaaS and PaaS and in cloud overall. Can it sustain that? Google makes the argument that it is the only hyperscaler with a leading foundation model. Now, AWS would probably argue that, but I think Google is probably right. I mean, Nova is yet to be proven. Nova is Amazon's, quote unquote foundation model. It's Amazon's proprietary LLM. Obviously, Google feels like it's critical. Of course, they, with DeepMind, they were in this business for a long, long time, but they feel like it's a critical fact that they own a leading foundation model. They claim they're the only hyperscaler to own a foundation model. When we ask them why that's important, is because they basically tightly integrate that foundation model into and infuse it throughout its product line. And so that should confer competitive advantage in the same way that Oracle gets competitive advantage from its integrating hardware and software. But that's clearly something that we're going to be watching. And how and when are customers adopting Google Cloud? Will this AI tailwind, how real is it? Will it continue? When is Google Cloud the right strategic fit? I think very clearly when data is involved, when AI is a huge priority, which it is for a lot of customers. It'd be interesting to see how Google's partnerships, they mentioned a partnership with NVIDIA, Dell got a little mention on the keynote as well. It was unclear what that solution was, but it sounded like it was a bring AI to the data on-prem or in sovereign AI. So what's that right strategic fit? That's something that we're going to be watching. I mentioned Paul Nashwati talking about infusing Gen AI into its dev tools. George Gilbert has made the statement before that Google was 2 years ahead of Microsoft in terms of infusing Gen AI into development tools. One of the things that Nashwati wrote was, he talked about GKE as the backbone for high performance AI inference and training, next generation Kubernetes, really moving into a supercomputing platform, if you will, an AI, supercomputing platform is I think how he framed it. So big developer push, and Paul's got that covered like a blanket. And then, Google's got a world-class data stack. I mean, you think about it, actually Google on stage said that their customer counts for BigQuery were 5x those of the other two leading data platform companies, the other two cloud data platform companies. So they didn't mention Snowflake and Databricks by name, but that's who they were talking about. And you think about it, Snowflake and BigQuery really were the two true cloud native cloud data warehouses. Redshift was an on-prem stack that was procured through a one-time license and then kind of retooled to run on the cloud. and its separation of compute and storage came later. It was sort of a separation. It was a bit of a bolt-on. No, it was more than a bit of a bolt-on. It was basically a bolt-on afterthought. It wasn't, a fundamental component of the architecture, as was Snowflake and BigQuery. And then of course Databricks with Spark entered the scene in the middle part of last decade and changed the Hadoop world, but then has built out a really effective, basically they created the whole data lake concept and have built out a very effective data platform. So it was interesting that Google made that comment. I had asked on theCUBE, one of Google's senior engineers, would you care to comment on the revenue splits, the relative revenue, because those numbers, that 5x sounded just way high. I've talked to Sanjeev Mohan about it a little bit as well. He and I were both a little skeptical as to the size of those customers. Google obviously has a lot of customers, probably a lot of small customers, probably a lot of startups using BigQuery. So we looked at the ETR data. GCP, ETR captures cloud data, they capture database and data warehouse. Okay, so and then when you cut it in cloud, you can do some cuts. And what it shows is Google actually is bigger in terms of account penetration than Databricks and Snowflake. So I think there's some merit to that, but the data didn't suggest that it's 5x. So could be a lot of small companies that aren't included in the ETR data set, or maybe some non-US companies that maybe aren't included, but we'll continue to dig into that. But the bottom line is Google's got a world-class data stack. They are doing a lot of great work around the so-called semantic layer, harmonizing data and really preparing for this agentic era. And they're in a really, really viable position with Vertex AI and the development tools and throughout the stack to really compete aggressively in the agentic AI wave. Something that wasn't talked a lot about, there was certainly a lot of security talk. Google acquired Mandiant a couple of years ago, but they couldn't talk about Wiz. Nobody would talk about Wiz. And that's something that we're really interested in, is how is the acquisition of Wiz and the focus on posture management, is this a new vector of growth for Google? It's clearly strategic. So that's something that we're really interested in and we'll be focusing on at RSA later on this month. And yeah, so overall, I would say, very exciting time. I think it was probably the most important Google Cloud Next ever, because the Google stack is really built for this moment. And so it's something that I know Google's very excited about, despite their third place position. As I say, it's a $50+ billion business growing at 30% a year. I think a lot of companies would take that. All right, that's it for now. I want to thank Alex Meyerson and Ken Schiffman, who are on production, and they do our podcast as well. Kristen Martin and Cheryl Knight help get the word out on social media and in our newsletters. And Rob Hof is our EIC over at SiliconANGLE.com. Thank you all. Remember, all these episodes are available as podcasts. All you got to do is search Breaking Analysis Podcast. Wherever you listen, it'll be there. I publish each week on thecuberesearch.com, and Rob posts as well on the SiliconANGLE.com. You can email me at david.vellante@siliconangle.com or DM me at dvellante. Comment on our LinkedIn post. Check out thecube.net. That's where all the action is for things like Google Cloud Next. We're actually there today. Friday, we're pre-recording this, but so by then it'll be up on demand. But you can check out all the events that theCUBE will be at, and check out etr.ai. They've got the best survey data in the enterprise tech business. We're right now collaborating on a survey ahead of RSA. Eric Bradley from ETR is going to come on at RSA. We've got our CEO series at RSA. I'll be there with Jackie McGuire and John Olczyk and the rest of our team. We'll be talking to CISOs, we'll be talking to technologists. It's going to be great. And so check that out. This is Dave Vellante for theCUBE Research, insights powered by ETR. Thanks for watching, everybody, and we'll see you next time on Breaking Analysis.